Welcome to Ballantyne Law, clear, practical legal advice that works.
Hello, I'm James Ballantyne and I'm the Managing Director at Ballantyne Law, and today I'm joined by Donna, our Accounts Manager.
Hi.
And we're here to have a quick chat about some of the outcomes of last week's budget.
So we're about a week out now from the budget announcement. What are your headline takeaways?
My initial thoughts are that this appears to be a real attempt by the government to drive a stake through the heart of the Venerable Family Trust. A lot of the discussion has been around the negative gearing and the CGT changes, but from my perspective as a practitioner who's worked in this area for 25 odd years, the issues relating to the changes, the way discretionary trusts are taxed, is really going to have some impact on business owners and investors.
So should businesses that have a trust in their structure be concerned?
I would say don't panic, but they should be paying attention. We don't have all of the detail at this stage yet, and we're waiting for some clarifications, and there's already been a couple of suggestions from the Prime Minister which may indicate that there might be some further changes.
So what actually changes?
Well, at quite a high level, the government says that it wants discretionary trusts to pay a minimum tax rate of 30%. So currently the way trusts work is typically trusts will distribute all of their income for a financial year, and that income is taxed in the hands of the beneficiaries at their beneficial tax rate. What's going to happen now is the trustees themselves will pay a 30% tax on the trust's income, and then distributions will be made and there'll be tax treatment for the beneficiaries. And this could, in a lot of cases, result in significantly higher tax being paid by the family members than what's currently on offer.
If I have a discretionary trust, am I in trouble?
Again, not necessarily. You should be keeping an eye on this, and you should be having discussions with your professional advisors, accountants and lawyers about what's going to happen, and particularly once we've got some more detail on what these changes are actually going to be.
I did actually hear that the government was perhaps going to be providing some relief with the capital gains tax.
Yes, they have announced some CGT relief for restructures out of a trust structure. However, there are likely going to be some important catches that people need to be aware of.
You sound like a lawyer.
Because I am a lawyer, but as I said, we don't know the detail of the legislation, and more importantly, transferring assets out of a trust structure in most cases will be a dutiable event. Now, stamp duty is a state-based tax. Different states have different rules. Queensland in particular, business assets are dutiable property, and we haven't had any releases or information yet about what approach state governments will take to restructures out of trust structure.
What other issues should we be concerned with restructure?
With restructures, it's not just the work that goes into preparing transfers and all of those things. There's some mechanical things that need to happen. If there is lending associated with the business, it might trigger a refinance. There might be need for valuations of assets to be done. New ABNs, new tax file numbers need to be registered. You need to contact suppliers and customers. You need new bank account details. It's something that takes some time and needs to have some thought put into.
What about from an estate planning perspective? I've heard, and it's been on the news recently, a lot of talk about death tax that they're trying to apply.
Look, that is something that does appear to be gaining a fair bit of traction, and were there to be any changes to what the government announced last week, I suspect that they might clarify the issue of testamentary trust, because nothing fires up the population like the concept of death taxes. So at the moment, it appears that existing testamentary trusts, so that is trusts where the person who created them has died and the trust has been created, will be grandfathered from the changes, but new testamentary trusts, so anyone who passes away and has a trust in their will be caught by the new changes when they come in July 2028. Now, that could have, again, significant and unintended consequences for beneficiaries, particularly children. People who are low income earners may end up having a far worse tax outcome than they do currently. I think, again, it's important not to panic. Talk to your lawyers, talk to your accountants about these things. We certainly have strategies in place to deal with changing tax laws anyway, but it's always a good idea to look at your estate plan, look at what your objectives are, and to make an assessment with the proper professional advice.
If someone isn't sure, they should get in contact with their accountant or lawyer.
Absolutely. The announcements are pretty new and we're still yet to hear the detail of them. You may not get an answer with much detail straight away. Your accountant and your lawyers should be across these changes and should have strategies for you in time to deal with the changes before they come in.
Thank you, James, for your time.
No problem.
For more legal insights, subscribe or visit ballantyneLaw.com. We're here to help.